Hi, my dear friends, how are you doing? So, guys, a very important video today, and that is regarding the statutory update for May 24 examination for the CA Inter Direct Taxes. So, the study material of June 23 doesn't have these changes, so you need to make the changes accordingly. These are the amendments. These are all the significant notifications or circulars issued between, 1st May and 31st October, which is very much essential and very much important for your examination May 24 onwards. So basically the changes are in very minute changes, but of course important changes, and you can expect these questions in the exam. Salaries, profit and gains of business or profession, income from other sources. Respect to your life insurance policy 1010D exemption, there is a change, and little bit of advanced tax, TCS, TDS, etc. Especially TCS, very important change has come with respect to the TCS on the liberalized remittance scheme, and some provisions relating to return of income, etc. That is all okay. The first change is rent-free accommodation, my dear friends. So if you come to our notes in page number 5.14, we had seen the perquisite 5.13. That is your rent-free accommodation in terms of, for government employees and for others. So basically for government employees, what was the deal? It was taxable as per the license fee decided by the government. And for other employees, if the entire accommodation is owned by the employer, then I had to see the population. If it is hired by the employer, then I should see the, taxable amount would be 15% of salary or higher charges, whichever is less. And if it is owned by the employer, then population I should have checked. If it is less than 10 lakh to 25 lakh and more than 25 lakh, then it was 7.5%, 10% and 15%. And hotel benefits, some other provisions were there. Now, interesting thing is rent-free accommodation may include furniture also, right? So in case value of furniture, which was there as part of the deal, so here I had to add the value of furniture. If it's owned by the employer, 10% of the original cost of furniture, or hired by the employer, actual hire charges is what was there. So ultimately, taxable rent-free accommodation used to be value of unfurnished rent-free accommodation plus value of furniture. That will be a total rent-free accommodation. So to this, some changes have come. That is what is given here in the statutory update. This can be downloaded from the institute website. If you go to our Board of Studies knowledge portal, you will get all the details here. Okay. So here, from 1st September 23, the CBDT has provided these notifications, substituted Rule 3.1 to specify the manner of determining the residential accommodation. So this is what is the new deal, where the accommodation is provided by the central government or any state government or the employees either holding office or post in connection with the affairs of the union or such state. So basically, central government or state government employee. So earlier, what was the deal? It was just the license fee as decided by the government. Nowadays, they are also collecting some rent from them. Employee is also paying some rent. So to make it very easy and to make it fair to everybody, this is the change. License fee continues as reduced by rent actually paid by the employee. So this part was not there. Now they have added this as reduced by the rent actually paid by the employee. Apart from that, this will be added. This is what my furniture shall be increased by. If furniture is owned by the employee, same thing. See, 10% per annum of the cost of furniture. So here also, you see, it was the same 10% of original cost of furniture. The wordings have changed to what? Per annum of the cost of furniture. Every year 10%, 10% you should do. That includes television, radio, refrigerator, air conditioner, everything you should do. If it is owned by the central government or state government. If it is not owned, if it is hired by them, then actual hire charges as reduced by, as I told you, any charges paid or payable by the employee during the previous year. So here what they have made a changes, which is very fair, I would say. Apart from just the license fee, you also reduce the actual rent paid, which this is same thing we're doing in the sums also, but anyway they have just given it in the final notification like that. Apart from that, 10% per annum you should take of the value of furniture if it is owned by employer. If it is hired by employer, then hiring charges and minus the thing already recovered is what they are trying to tell. So let's say the license fee turns out to be 2 lakh and you have recovered from the employee 1 lakh. So 1 lakh will be my perquisite. To this, I have to add the furniture. Furniture is owned by the employer, that is by the government. Let's say the furniture valued of 10 lakhs is given. So 10 lakhs into 10%, 1 lakh is added. Totally 2 lakh will be my perquisite. On the other hand, if this furniture is hired by the employer, central government hires it out from somebody else. It pays around 2 lakh rupees to somebody, higher charges, and they recover 1 lakh 50,000 from the employee. But this 50,000 is the extra benefit. So then the perquisite will be 1 lakh plus 50,000, 1 lakh 50,000. That is what this entire thing is about. On the other hand, here, where the accommodation is provided by any other employer, where the accommodation is owned by the employer, 10% of the salary in cities having population greater than 40 lakhs, 15 lakhs to 40 lakhs, and in other areas. So this has changed, guys. So come to this particular page number 5.14 and make the change here. Greater than 40 lakhs. Greater than 40 lakhs. Then here the amount of taxable salary will be 10% of salary. Next, more than 50 lakh, 15 lakhs, less than 40 lakhs. More than 15 lakhs, less than 40 lakhs. This 15 to 40 lakhs. This will become 7.5% of salary. And if the population is obviously less than 15 lakhs or any other case basically, then this will become 5% of salary. That's the change. So now population less than 15 lakhs, 5%. 15 lakh to 40 lakh, 7.5%. More than 40 lakh, 10%. That is the change here, guys. Nothing else. As reduced by rent, if any, that is normal, whatever is there usually. And if it's owned by the same thing, 10%. Otherwise, higher charges as reduced by these things. Very fine. That's the same. Where the accommodation is taken on lease or rent by the employer, means if it is hired by employer, then if you see, actual amount of lease rental paid or payable by the employer or 10% of salary, whichever is lower. So this will be 10%. Please make these changes in the notes. Page number 5.14. Okay. 10% of salary or higher charges, whichever is less. So those are the changes, guys. Population less than 15 lakh, 5% of salary, 15 lakh to 40 lakh, 7.5% of salary, population more than 40 lakh, 10% of salary, taxable amount, 10% of salary or higher charges, whichever is less. Where the accommodation is provided in a hotel by the employer being central or state government or any other employer, this part, up to 15 days, no problem. Otherwise, you see here, 24% of salary paid or payable for the previous year are actual charges. That remains the same, whichever is less, as reduced by rent actually. So 15 days, up to 15 days, nothing. So this will remain the same, no problem. This will not change. Same. So now let's say you are transferred from Bangalore to Chennai, and but you are living somewhere else. Your family, etc., is in, let's say, Raipur, but you are presently in Bangalore but shifted to Chennai. Uh, Since you're shifting, they are asked you to vacate your house in Bangalore and they're giving you a hotel there. And even in Chennai, they have given you a hotel until you find a accommodation. Now you are being given property both the places. What to do? If an employee is provided with accommodation account of his transfer from one place to another at the new place of posting while retaining the accommodation at the other place. If not given a hotel in Bangalore, whatever quarters you had in Bangalore that you are retaining, and in Chennai also they are giving you a hotel or one more accommodation for a brief period, whatever it is. Like maybe 30 days, 40 days, or 20 days, they are giving you accommodation at both the places. Value of the perquisite shall be determined with reference to only one such accommodation which has a lower perquisite value as calculated above for a period of not exceeding 90 days and thereafter both. So guys, for 90 days, you compute the perquisite in Bangalore, you compute the perquisite in Chennai, whichever is lower you take for 90 days only. After 90 days, nothing doing, both you should take as a perquisite. That is what they have told. And in case the accommodation is taken on lease or rent by the employer, that is this case, hired by the employer, what we should do take generally 10% of the salary or higher charges, whichever is less, right? Yes, that's true. But next year, what will I take? For example, higher charges, they have hiring your salary is, let's say, 40 lakhs. What is the higher charges? 10%, 4 lakhs. It will be a perquisite. But that property, they are hiring at 6 lakh rupees. So it is 4 lakh or 6 lakh, whichever is less. Which is less? This one. Correct? Next year, this is first year, no problem. Next year, they will increase your salary to, there's a huge hike, 70 lakhs. You've done some good job, good work, 70 lakhs. Now what will become 10% of salary? 7 lakh. 7 lakh or 6 lakh, whichever is less, will you take 6 lakh? That's the question. So that's why this provision is given. See, where the accommodation is owned or taken on lease or rent by the employer and the same accommodation is continued also to be provided to the same employee for more than one previous year, the value of the perquisite as calculated in 2 shall not exceed the amount so calculated for the first previous year. Mind you guys, first previous year means 1st April 23 to 31st March 24. That they have given here very clearly. Previous year 23-24. Or the previous year in which accommodation was provided to the employee, whichever is later. So the base year is this much only. Going forward is what they are saying. So this is all amendment which has come for previous year 23-24. As multiplied by the amount which is a ratio of the CIF for the previous year for which the value is calculated and the CIF for the previous year in which accommodation was initially provided to the employee. So they are saying going forward, let's say the accommodation was provided to you when? (23-24). Accommodation was provided to you in 23-24. Right? Next year I'm saying in 24-25 what to do. So here accommodation was provided, I told you 40 lakhs was your salary, 60 lakhs was what they were, 6 lakhs were what they are paying for that accommodation. So 10%, 4 lakhs or 6 lakhs, whichever is less, 4 lakhs. No problem. Value of perquisite is 4 lakhs. Next year, your salary is increased to 70 lakhs. So 7 lakh or 6 lakh, whichever is less. Should you take 6 lakh is the question. The answer is no. You should take this only, 4 lakh into either this, they are saying 6 lakh, or this 4 lakh into cost inflation index of 24-25 divided by cost inflation index of 23-24. Very simple. For 23, 24, with the cost inflation index, it was 4 lakh. So for 24, 25, what will it be? So 4 lakh into CII of 24, 25 divided by 23, 24. Like that. This question you may not ask, they may not ask because we are in 23, 24 only for our examination. But still you should remember. So either it will be 6 lakhs or whatever value comes with this, whatever value comes, that we have to take into account, whichever is less we should take, obviously, because it says it shall not exceed. It shall not exceed is what they say. So the CIA for 24, 23, 24 is 348, and this, let's say they make it as 360 or something, let's say. So next year, what will be the value of this perquisite? This is the base year or first previous year. So when the CIA was 348, it was 4 lakh. So when the CIA is 360, what will be the value? So do the math. How much will it be? Let me just do. I'm just saying. So now they will not give, but later they may give like that. Let me make it like 470 or something. 370, sorry. So 4 lakh into 370 divided by 348. 4 lakh 25,000 something, it will come. So it will come up to 4 lakh 25,000. So that's what, 4 lakh 25,000 or 6 lakh, which will you take? 4 lakh 25 only you will take. That's what they are trying to tell, that whatever value you fix it in the base year will be 23, 24. Then you should use the CII method. You see, if the same accommodation, if where the accommodation is owned or taken on lease or rent by the employer, the same accommodation is continued to be provided to the same employee for more than one previous year. The value of perquisite as calculated in 2 above. What is the value of perquisite calculated? 4. Shall not exceed the amount so calculated for the first previous year, 4 lakh, as multiplied by the amount which is the ratio of CI of the previous year in which the value is calculated. And what is the year for which value is calculated? The next year, in my example, 24, 25, divided by the CI of the previous year in which the accommodation was initially provided, 23, 24. That's all. For the first previous year means 23, 24 onwards. So this will come for the next year, so you leave it. But anyway, you should know. Now, my dad was in the Indian Forest Service, and many times in his year, in his tenure, he was deputed also. On deputation, they send it. So the Karnataka government owned a stake in something called as Mysore Paper Mills Limited. It was a state government owned undertaking. And my dad was director forest of Mysore Paper Mill. For 2-3 years he worked there. So though he was Karnataka Forest Department, Indian Forest Service, he was deputed to Mysore Paper Mills to look after the inflow of trees, etc. Because for paper you need trees. So now I remember we also had gotten accommodation that time, right? So then in that case, what will be the perquisite? Is the employer Karnataka Forest Department, Karnataka government, or is the employer Mysore Paper Mills Limited, which is a separate company? What to do? So if you see, where the accommodation is provided by the central government or state government to an employee serving on deputation with any body corporate. So my dad, state government, though is a central government employee, is serving as director of Mysore Paper Mills. So who's the employer here is the question. Central government or Mysore Paper Mills? That's what they are trying to tell. Employer of such employee shall be deemed to be that body corporate where the employee is serving on deputation. So who's the deemed employer? Mysore Paper Mills. Value of the perquisite of such accommodation shall be the amount calculated in accordance with as if the accommodation is owned by the employer. That's all. It all goes down to the employer now. That's what they're trying to tell. Done. So next, under 35D, amortization of preliminary expenses. So let's see the notes. Page 7.24. Amortization of preliminary expenditure. Expenses before commencement of new business and after commencement of new business for setting up of a new unit or existing undertaking, whatever the case may be. This is the limit that you will get. 5% of the cost of project or 5% of capital employed, whichever is higher, or preliminary expenses, both whichever is less, company or SSE. Company SSE basically. Others, preliminary expenses or 5% of project, whichever is less, you will get. Deduction is allowed in 5 equal installments. This is what we normally know. So here, SSE has to furnish a statement containing the particulars of expenditure in connection with these things. So you should furnish a statement as to what all expenditure you have spent on preparation of feasibility report, project report, any market survey, engineering service, etc. A statement has to be given with all the particulars. Only then you will be eligible to get that 1/5 deduction. That's what they are trying to tell. This statement is mandatory. So this is a very theoretical thing. You can just go through. So you need to prepare a statement. Now, guidelines with respect to 1010D. Life insurance policy. Other than ULIP. So if you see in our material, just a sec, 9.18 guys, page number 9.18 in our material, all the details are given. Here under ULIP it is given 8.41 is about ULIP, but other than ULIP it is given in 9.18. All these provisions. So all these now especially will change to this, come to this page, is most important. Yeah. Section 1010D provides for exemption of the sum received under a life insurance policy, including the sum allocated by way of bonus on such policy, subject to the condition that annual premium does not exceed 10% of the actual sum assured. So if your premium is less than or equal to 10% of sum assured, then you will get an exemption under 1010D. Whatever amount you receive from a life insurance policy, whatever you receive in the end as a maturity amount, fully it will be exempt in the hands of the taxpayer, provided your premium is less than or equal to 10% of the sum assured. However, with effect from 24/25, 1010D has been amended to provide that in case where an SSE has a single life insurance policy other than ULIP, because ULIP definitely is taxable. Unit linked insurance plan is unit linked insurance policy is taxable. This is a different thing. Single life insurance policy issued on or after 1/4/2023. Exemption under 1010D would not be available with respect to any life insurance policy issued on or after 1/4/23 if the amount of premium payable exceeds 5 lakh rupees of any previous year. So this is for all the policies issued after 1/4/2023. If the premium amount is more than 5 lakh rupees, then this section, the exemption will not apply. Mind you, for the policies issued before 1/4/2023, this 5 lakh rule will not apply. But what will apply? This 10% rule will apply. But if it is after 1/4/2023, even if it is less than 10% also, but if the premium happens to be more than 50 lakh rupees, then, sorry, 5 lakh rupees, then there is no exemption as such. We will see examples. Institute also has given examples via notification. It will easily be understandable. In case where an SC has multiple life insurance policies, guys, issued on or after 1/4/2023, and it has multiple policies and the aggregate is exceeding 5 lakh rupees. Aggregate is exceeding 5 lakh rupees. But the premium is definitely less than 10% of the actual sum assured. So this rule we have to follow. Premium should be less than or equal to 10% of the sum assured. That will remain the same. However, individually those policies are like 1 lakh, 1.5 lakh, 2 lakh, 2.5 lakh, everything. But if you add everything, it is crossing 5 lakh. Then the lawmaker says that they are at the option of the SSE. Whosoever aggregate premium does not exceed 5 lakh, then you can claim exemption for them. For this also, I'll show you examples, don't worry. Death of a person, obviously, exemption will be available. Now, guidelines says check the examples. They have only given examples because it becomes very, very simple. Situation number 1. No sum of any nature, including bonus, is received by the SSE for any of the life insurance policies issued on or after 1/4/23. During any previous year preceding the current previous year, or consideration has been received on such eligible life insurance policies in an earlier previous year but has not been claimed exempt. In such a situation, to be determined as under. What is this? Never have I received any amount from the life insurance policy. There is no maturity amount received. I have never claimed any exemption before. And all the, what do you say, life insurance policies have been issued after 1/4/2023. So how will I compute my exemption? Let's see the examples, guys. Very, very simple. If the amount of premium payable on such eligible life insurance policy does not exceed 5 lakh rupees for any of the previous year during which the eligible LIP and annual premium does not exceed 10%, then full exemption you will get. But the moment your premium is more than 5 lakh rupees for any of the previous years, then that consideration would not be eligible for 1010D. So guys, you should fulfill the first condition of premium should be less than or equal to 10% of sum assured. If this condition is satisfied, next you see whether your premium exceeds 5 lakh. If it is less than or equal to 5 lakh, no problem. The moment it exceeds 5 lakh rupees, gone. You will not be eligible for any exemption. Nothing to worry. See the example, you will understand. Date of issue 1/4/2013. Annual premium 6 lakh. Sum assured 60 lakh. So is the premium less than or equal to 10%? Yes. So is this condition fulfilled? Yes. But does the premium exceed 6 lakh? Yes. But most importantly, what did I tell you here? Here only I told you. This 5 lakh will come only and only if you have issued the policy on or after 1/4/23. If you have issued your policy before 1/4/23, this 5 lakh concept will never come. Only the premium concept will come. In this example, you ignore the date of issue for a while. If you ignore the date of issue, have I breached? My first condition is what? Premium must be less than or equal to 10% of sum assured. Premium is 6 lakh, less than or equal to sum assured, 10% of sum assured, 6 lakh. 6 lakh is equal to 6 lakh. So, is the condition fulfilled? Yes. Second condition, the premium, is it more than 5 lakh? Yes, it is. But I told you that premium 5 lakh I should see only and only and only if the policy was issued after 1/4/23. In this example, policy was issued only after 1/4/2013. So that 5 lakh concept will never come. So this entire 70 lakh that you have received on maturity, that entire 70 lakh which you have received on maturity is not, is not taxable, it is fully exempt. Since annual premium does not exceed 10%, the policy has been issued before 1/4/23, limit of 5 lakh will not apply, and hence it is not an eligible, and it's not an eligible ULIP also. If it's a ULIP, then it will be taxable. Next you see, this first of all in the exam you should see date of issue. The moment date of issue comes now, automatically two conditions will come. Condition number 1, premium must be less than or equal to 10% of sum assured. In this premium is 5 lakh, sum assured 50 lakh, 10% of sum assured 5 lakh. Is 5 lakh equal to 5 lakh? Yes, so first condition satisfied. Second condition, premium should not exceed 5 lakh. Is it exceeding 5 lakh? No, both the conditions are satisfied. Hence, this entire 52 lakh received will be exempt. Very, very simple. Here you see, condition number 1, is it issued on or after 1/4/23? Yes. Second condition, is the premium less than or equal to 10% of the sum assured? Yes. Third condition, is the premium more than 5 lakh? Yes. The premium is more than 5 lakh and no exemption. Three conditions in the exam. First one, is it issued after, on or after 23? Second condition, is the annual premium less than or equal to 10% of sum assured? Third condition, is the premium less than or equal to 5 lakh? If it is a yes, if it is a yes, if it is a yes, exemption. If 1 also is a no, basically the 2 and 3 is a no, then no exemption. If first one is a no, then third condition will not come. If first one is a no, means it is issued like some 2013 or something, then the third condition will never come only. On the other hand, if we have received more than one, if you have received many items, if you have applied in multiple policies, and if you have received money, what to do? Aggregate amount of the premium payable on such eligible LIPs does not exceed 5 lakh for any previous year, and annual premium is less than or equal to 10%. Same condition, such considered will be eligible for exemption. The aggregate of the amount of premium is more than 5 lakh. Consideration in respect of any of those eligible LIPs, aggregate premium does not exceed 5 lakh rupees for any previous year would be eligible for exemption. You'll see examples. Like this, if you read, you will not understand. See the examples. So you see example number 4. Condition number 1, is it issued on or after 1/4/23? Yes, yes. Condition number 2, check the premium. Is it 10%? Yes. Is it 10%? Yes. Second condition also done. Third condition you see. Two policies you have done. Take the aggregate 5 lakh. Is it less than 5 lakh? Yes. Less than or equal to 5 lakh? Yes. So, consideration you received on 32 lakh, 21 lakh. Since it does not exceed 5 lakh and it does not exceed 10% of the actual sum assured, therefore, both policy A and policy B, that is 32 lakh and 21 lakh, will be exempt under 1010D. Here you should see the aggregate, that's all. Be exempt under 1010D. Simple. Next you see here. 45 lakh 10%, 4 lakh 50, condition satisfied. 55 lakh 10%, 5 lakh 50, condition satisfied. First condition, is it issued after 1/4/23? Yes. Second condition, is the premium less than or equal to 10% of sum assured? Yes. Third condition, aggregate of the premium, is it more than 5 lakh? Yes. Ideally, you will not get exemption, but you see the rule here. If aggregate is more than 5 lakh, for those policies where the premium does not exceed 5 lakh, for that you will get exemption. Which means of these two, which of the items individually is less than 5 lakh? First one. So you'll get exemption here, here you will not get exemption. Figure out. LIPA would be exempt. LIPB will not be exempt. Simple. Very easy, guys. All of you with me? Yes. Next one. A, B, C. 1423, 1423, 1423. Yes, first condition satisfied. Second condition 10%, 10%, 10%. Second condition also satisfied. Third condition, add all the three. Is it more than 5 lakh? Yes. But I should see now individually. Is it less than 5 lakh? No. I'm sorry. Is it less than 5 lakh? Yes. Less than 5 lakh? Yes. More than 5 lakh? Yes. So will C come? No. A and B, will you get exemption? Yes. See? Very, very simple. Can you see here? 23, 23, 23. This one not applicable. When it is not applicable, that 5 lakh scene will not come at all. Even though it's exceeding 5 lakh, no problem, because it is not issued on or after 23. I hope you understood. But the 10% rule will come. Will 10% rule apply? Yes. So automatically the 62 lakh fully exempt. Yes or no? 5 lakh rule will not apply because rule number 1 only doesn't apply. What is rule number 1? It should be issued on or after 1423. Here you see 10%, 10%, 10%, no problem. Aggregate, if you add more than 5 lakh, yes. But then C is more than 5 lakh individually. So for this it will not come. A and B it will come. So X will come because of being issued in 22, not 23. A and B will automatically come because of this rule. So X will be exempt. A and B will be exempt. C alone will not be exempt. Very, very simple. In situation number 2, where consideration has been received by the SC under one or more eligible LIPs, again issued on or after 1423, during any previous year preceding the current previous year, it has been claimed also earlier. So already you have claimed once. You have taken many policies, in that one you have already claimed exemption. How will it be for the remaining ones? So the aggregate, so what is the earlier exempt? Whatever is exempt for already claimed exemption. So can you claim again? So already which you have claimed, it is called as earlier exempt eligible LIPs, EEE LIPs. ULIP, this is ELIP. Don't add one more thing. Sir, we have ULIP, this is ELIP. Like that, don't write. Okay. So earlier exempt eligible LIPs. And corresponding examples they have given. If aggregate amount of premium payable on such eligible LIP and ELIP does not exceed 5 lakh for any of the previous year, and it does not exceed 10% of actual sum assured also, it will be eligible for exemption. Aggregate amount of premium payable on such eligible LIP is more than 5 lakh and not be eligible for exemption. Same logic. Similarly, you have done more than one. This is only one eligible LIP. This is more than one eligible LIP. Same logic. Consideration, if your aggregate consideration, aggregate of the amount premium received does not exceed 5 lakh, annual premium does not exceed 10%, then it will be eligible. The aggregate amount of premium payable of such eligible LIP and ELIP is more than 5 lakh, then if it does not exceed 5 lakh for any of the eligible years, it will be eligible. Same like before, guys. Again, see examples, you'll understand. Don't worry. Let's see the examples. See the examples, you'll have absolutely no doubt. Here. 1423, 1424, 1424, 1424. All are eligible. 10%, 10%, 10%, 10%, no problem. Take the aggregate. Is it more than 5 lakh? Yes. But I should now see what? Individual. This was received on 1/12/33. This would be received in 34. Let's take one by one now. X it's received in 33 and Individually also it's less than 5 lakh. So this is 100% exempt in 33. Is what is given here. Next, if you see, aggregate of the annual premium payable for LIP A, B, C along with X exceeds 5 lakh during the term of these policies, all put together. Definitely exceeding 5 lakh, no doubt about it. Aggregate of the annual premium payable for LIP A and the premium for LIP X also exceeds 5 lakh. A also exceeds, C also exceeds. X and C, A doesn't exceed. A is just 1 lakh. This is wrong, guys. Annual premium for LIP A and premium for, okay, aggregate they are saying. Yeah, you're right. Aggregate of A and X also will be more than 5 lakh. You're right. This is correct. Aggregate premium, you see, A and X aggregate 5 lakh 50,000 exceeds 5 lakh. No doubt about it. Consequently, the consideration under LIP A, B and C would not be exempt under 1010D because it is exceeding 5 lakh. That is what it says. Now you read carefully. If the aggregate of the amount of the premium payable on such eligible LIP and earlier exempt LIP is more than 5 lakh rupees for any of the year, consideration in respect of any of those eligible LIPs, etc., where it does not exceed 5 lakh for any of the aggregate amount should not exceed 5 lakh for any of the previous years would be eligible for exemption. So, if for example, if all these put together was just 1 lakh, 1 lakh, 1 lakh, 1 lakh, then you will get exemption. But here aggregate all put together is more than 5 lakh, hence there will be no exemption. Because for this it is exempt. Once you have already claimed exemption, for remaining you will not be able to take exemption. That is this rule. They have given very good examples, so just follow this. Consequently, the consideration received under LIP A, B and C would not be exempt under 1010D. Not be exempt under 1010D. So these examples will help you. Okay. So guys, slight difference here is in the year 34, you have to consider the earlier exempted ones. Which is the earlier exempted one? This one. So the premium that you paid on the earlier exempted one and the current one, if it's exceeding 5 lakh, then you will not get any exemption. That's what they say here. Whose aggregate amount of premium along with the aggregate amount of earlier exempted should not exceed 5 lakh rupees. Got it? See now here. 23, 24, 24, 24. First condition satisfied. 10%, 10%, 10%, 10%. Second condition satisfied. This was received 30 lakh. It was 2 lakh 50,000 rupees. Is it less than 5 lakh? Yes. So LIPX will be exempt. No tension. Then you see aggregate of ABC exceeds 5 lakh in terms of these policies. For sure. You see this here. What does it say? Earlier exempted policy plus current policy should be less than 5 lakh rupees. So in the year 34, this 6 lakh is definitely not possible. It's exceeding 5 lakh. So C is definitely not possible to claim exemption. X you have claimed exemption. Now if you see these two though, 2 lakh 50 plus 2 lakh is less than 5 lakh, or 2 lakh 50 plus 2 lakh 50 is less than or equal to 5 lakh. So you can definitely claim one among these two, A and B. You can claim exemption. Why? It is less than 5 lakh rupees. So if you see here, here also you see for that matter, 4 lakh 50 plus 1 lakh is going beyond 5 lakh. 4 lakh 50 plus 1 lakh 50 is going beyond 5 lakh. So nothing can be done. This is again more than 6 lakh, so nothing can be done. But here you see both are maturing, no? You can do a combination of X plus A, earlier exempted plus current one, or X plus B, earlier exempted plus current one. Since the aggregate is less than 5 lakh rupees here, you can go for one more exemption among A and B according to you, your choice. What would you do? Would you rather have 24 lakh exempt or 38 lakh exempt? 38 lakh exempt is better, no? You see. Consideration received under LIP A or B, anyone can be claimed as exempt under assessment year 35, 36. If the consideration received under LIP A is claimed as an exempt as an aggregate of the annual premium A did not exceed 5 lakh, the consideration of B would not be exempt. Obviously, X is already exempt. If you claim A as exempt, B will not be exempt. If you claim B, then A will not be exempt. What would you claim? B only would be better. On the other hand, if you plan properly, you need not take this exemption at all of X. And now you can claim both A and B as exempt because you have not claimed it before. If you have never claimed it before, then this will not come under this situation at all. It will not come under earlier exempt scheme. This will come under the previous one which we saw here. It will come under this. So under this you have already discussed what is the procedure. So no tension. So alternatively you can ignore X and you can claim exemption of 38 plus 24. Or you can claim 30 plus 24 or 30 plus 38. Which is better guys? 30 plus 38. Correct? So you can choose to ignore X and claim 24 and 38 as exemption. Or you take X plus A, X plus B exemption. X plus A will be 30 plus 24, X plus B will be 30 plus 38. So always better 30 plus 38. Done. Then last example. Easy guys, very easy. Cool with a cool mind. 23, 23, 24, 24, 24, all will come. 10%, 10%, 10%, 10%, 10%, all will come. No problem. Different years it's coming. LIC, this LIPX will definitely come because it is less than 5 lakhs. So this 12 lakhs can be exempt definitely. Next, Y, when you are counting this 24 lakh, you have to add these two. 2 plus 2, 4. So definitely you can claim this also. No problem. It's less than 5 lakh rupees. On the other hand, now, when you are considering A, B, and C, you also should consider X plus Y. These are earlier exempt ones. Earlier exempt ones. This anyway will never be exempt because it's more than 5 lakh. This is out of the picture. So you should do X plus Y plus A or X plus Y plus B. Premium should be less than 5 lakh rupees. 2 plus 2 plus 2, 2 plus 2 plus 3, never less than 5 lakh. So A and B you can never claim. Simple. On the other hand, you can ignore, that is one treatment. On the other hand, so in this example, you are getting how much guys? 12 plus 24. You can ignore this, surrender this exemption. You can take Y. Then you can either take Y plus A or Y plus B. Y plus C is not possible only. Because if you see 2 plus 2 is less than 4. 2 plus 3 is also less than 5. 2 plus 2 is also less than 5. So you can take both exemptions, no problem. So you can take 24 plus 24 or 24 plus 36. This is better. 24 plus 36. So you see here. In every case, under C will never be exempt. We have seen that. If consideration received under B is claimed to be exempt as aggregate does not exceed, the consideration received under A would not be exempt. Same thing. And as discussed, exemption for consideration received under B is most preferred as it is beneficial. So guys, I can ignore X and take Y plus B because I'm going to get 24 plus 36. Hope you understood. These are all the provisions with respect to ULIP. Very, very important, guys. Definitely, they will ask you as an MCQ or whatever it is. Interesting provisions. In all these things, very simple, it will be exclusive of the amount of GST. When I am computing the premium, GST component should be excluded. So whatever premium I am seeing here is exclusive of GST. Limit of 5 lakh of amount of premium payable would not be applicable in case of a term life insurance policy where sum of the life insurance is given to the nominee in case of the death. If it's given to the nominee can take the full amount, no problem. Any sum received under a term insurance shall continue to be exempt irrespective of the amount of premium payable. No, premium paid would not be counted for 5 lakh also. I will not see 5 lakh, I will not see anything. Let's say if I die, my wife will get 3 crore, 4 crore rupees. That is fully exempt in her hands. If anything happens to me, this video is proof. I'm just kidding, man. Right? Yes. Got it? Right. Don't go tell anybody. Okay. All dialogues are only within the 4 walls of your room. Correct? Anything is purely coincidental and it can be denied at a later stage. Done. Next. Where any sum is received, including the amount by a bonus at any time during the previous year under life insurance policy, other than ULIP or KMP, the Keyman insurance, life insurance policy, where will it be taxed is the question. I'm telling you it's taxed, exempt, tax. Where will it be taxed? IFOS. Something which is not exempt under 1010D, the sum so received as exceeds the aggregate of the premium paid during the term shall be taxable under IFOS. So you see here in this example, I have paid, for example, guys, I would have paid over the course 20 lakh as premium, but I received 80 lakhs as sum assured. Difference 60 lakh will be taxable under IFRS. Assuming there is no exemption, so 60 lakh will be taxable. If the sum is for the first time during the previous year, A minus B, sum or aggregate of the sum received and liability during the first previous year and aggregate of the sum paid during the premium paid. Same thing I told you, 80 minus 20, 60 lakh will be taxable. Same provision. Basically, guys, all this you leave simple provision. Whatever is you have received consideration minus whatever premium you have paid, difference only is taxable. Simple. Next, 194A provides for deduction of tax at 10% by any person other than individual or HF. It is on interest other than interest on securities. So generally, anything, any interest that you are going to get, especially on deposit with post office, etc., all these things, you will have the deductor should deduct 10%. But if the aggregate amount of interest paid does not exceed 40,000 for normal and 50,000 for senior citizen, if you have made a post office scheme, etc., then no problem. No need of any TDS to be deducted by the deductor, by the post office or whatever. So accordingly, there is one scheme called Mahila Samman Saving Certificate. So under this, it is only applicable for 2 years, 1st April 23 to 31st March 25. Maximum you can deposit 2 lakh rupees in the name of a woman or a girl child for 2 years at a fixed rate of 7.5% per annum. So 7.5% per annum, if you compound also, it will never cross 40,000 rupees. And hence they are trying to tell that there will be no TDS deductible. So when you are getting that interest of 7.5% compounded quarterly, no need of deducting TDS under 194A. Easy one. Next, there is a new section 194BA which we have discussed in class also. This is for what, guys? Online game. All your online lottery, online rugby, or any online game like Dream 11, etc. will all come under 194BA. Net winnings, whatever net winnings you get in the user account at the end of the year, 30% tax rate is what they say. So there were some doubts which were raised. They are saying, sir, if the winning is 50 rupees, 20 rupees, 30 rupees, and that fellow is withdrawing 20 rupees, 30 rupees like that, should I deduct TDS that time also, is the question under 194BA. So that's why they said no. If the winnings is less than 100 rupees, no problem. Tax not deducted on account of this concession is deducted at the time when the net winnings exceeds 100 in the same month, end of the financial year. So they are trying to tell if it is less than 100 and if you have not deducted tax and in the end is withdrawing less than 100 rupees, no problem. And in case anything is payable also, like every time is winning 100, 110, 120, 90, 70 like that. And in the end, you have not deducted because the amount is less than 100 rupees. But if you add everything, it is coming up to some amount which you have to deduct. Then also no problem if the deductor undertakes the responsibility of paying the difference if the balance in the user account is not sufficient to discharge the tax liability. So basically, every time 100 rupees in a month, 90 rupees is winning every month, guys. Is withdrawing 90, 95, 96 like that is withdrawing, no problem. In the end, some 20 rupees balance is left. Because you need not deduct if it is less than 100, you have not deducted. But if you add everything, net winnings during the year, it is coming up to some 5,000 rupees, assume. Or it's coming up to, let's say, 1,300 rupees or whatever. 1,200, 1,000 rupees it's coming up to. You have to deduct tax. That time, balance in the account is only 20 rupees. So here they are trying to tell the deductor undertakes responsibility of paying the difference. So the deductor will tell, don't worry, I'll only pay the difference, no problem. Or I'll deduct from this 20 rupees. Or if he's withdrawn everything and it's 0 rupees, I will pay. If he agrees like that, then this 100 rupees, no problem, you can withdraw. 100 rupees in a month. No TDS. Otherwise, TDS is there. If it crosses 100, TDS is there. This is a simple, guideline, guys. That's it. You can ignore it, no problem. One more interesting point is, what if the net winning will include kind also? This fellow will win one bike, this fellow will win one car, then what to do? So generally 194BA is for cash, but in case there is kind also, very simple. If I won the car, just like lottery winning, here also he has to ensure that the deductor has to ensure that the tax has been paid on it. Simple as that. Only then you can go ahead. Otherwise, no. Now, what will be the valuation of the winnings? Very simple. If, for example, Reliance is themselves having this particular online game, if they win, the Jio Cinemas has no that if you show the next, if you predict the next thing, you will win something, you'll win something. Let's say they will win a Reliance Jio phone worth 10,000 rupees. What is the value of the phone? 10,000. Who is producing it? Reliance Jio only. So the online game intermediary, Jio Cinemas, for example, if they are manufacturing such item, for example, 10K worth of phone, in that case, price that is charged to the customer itself will be the value of winnings. So you have one worth 10,000. So this will be your net winnings. On the other hand, if Reliance Jio is buying a car, Tata Neo car, it is buying and giving it to the customer who won, then it says has purchased the winnings, then the purchase price. It has bought the Tata Neo car at 10 lakh rupees. So what will be the value of the winnings? 10 lakh. Very, very simple. So this is about winnings. And again, guys, again, GST will not be included for the purpose of valuation. GST will not come. Next, my dear friends, very, very, very important point on TDS and TCS. TCS especially. So under 206C1G, if you have seen the notes as well, page 15.28 in our material, we have already made this amendment here. But anyway, to add on to that, this particular notification has told some other things. So any person being an authorized dealer who received an amount for remittance outside India in a liberalized remittance scheme, as we have discussed in FEMA, there is something called as liberalized remittance scheme to the tune of 2,50,000 US dollars per annum. Every person can spend without any RBI approval. But after that, you would require an RBI approval. So up to that amount, if you are spending, no problem. But beyond that, if you spend, then you will have to take RBI approval. LRS can be used for any capital account and current account transaction. Or one more is, if you are a seller of an overseas tour program, then like for example your Chariot World Tours or your Kesari Travels, all these people, if they are organizing, if they are collecting money, they have to deduct, they have to collect rather TCS. How much percentage etc. depended on two things in this year, especially 23-24, split between 39-23 up to that one rate. After that one rate was there. That rate got changed, to be honest, only for other items. For everything it's the same, not kidding. 5%, 5%. Nil, 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 nil. 5%, 5%. Here also. For normal cases, it was 5% in aggregate of 7 lakhs. 20% it became in aggregate of 7 lakhs for other than the items. So to make it very simple, institute only, and of course the notification also says this is actually what it is. As I told you, before 110.23, after 123, everything is the same except this item. Everything else and this item, overseas tour package. Two items are changing, that's it. Predominantly. Here also you see, this is changing here, this one, and this one. Except these two, here also, this and this. So let's see. So check this out, buddies. Remittances for purposes of education or medical treatment. If it's education or medical treatment, up to 7 lakhs, no TCS. 5% of the amount or aggregate of amounts in excess of 7 lakhs, you should pay 5%. But if that education you have taken a loan, no. For loan, you already are paying interest. So again, if you have to pay 5% TCS, it will be a burden. That's why they have reduced it to 0.5%. Up to 7 lakh, no TCS, 0.5 of the amount, aggregate of 7 lakh is 0.5%. Other than 1 and 2, that is other capital account transaction, current account transactions, that is if you are going for a trip, etc. Or if you are going abroad for some, 3-4 weeks for some work, etc. Whatever the case may be. Up to 7 lakh, no problem. 5% of the amount in excess of 7 lakh, that is up till 1st October 23. After, on or after 1st October 23, no TCS up to 7 lakh, but 20% of the amount in excess of that. This will include credit card transactions also. Apart from that, if you are going through a travel agency, overseas tour program. Earlier it was 5% without any threshold limit. Now it is 5% up to 7 lakh and 20% above 7 lakh. The biggest question people were asking was, sir, this 7 lakh should be seen each item wise or all together in a year? All together in a year. One more question was, sir, I'll go to various agencies to get my, what do you say, foreign exchange. I'll go to Western Union Money Transfer and buy 4 lakhs. I'll go to ICICI Bank and take 4 lakhs. They will not know where else I got the money from. No. So should it be seen agent wise? Generally, Western Union Money Transfer, ICICI Bank, they are all called authorized agent. Should I see authorized agent wise or should I see aggregate, that is the SSC wise? Obviously, the SSC wise. Then the question will be asked, how will the other person know? How will Western Union Money Transfer know that you have actually taken from Western Union Money Transfer, you have taken from ICICI, you have taken from HDFC? How will they know? Is there any place where I can get to know everything? So as of now, it's not there. RBI is still building that capability. Not there now. So best thing is you should take a declaration from that fellow. So you will get it signed saying that I have not taken money anywhere. If I have taken anywhere, these are the places where I have taken this year. If that declaration is false, then that person who's taking money, that is me, I'll be liable. Western Union Money Transfer will not be liable. If income tax department goes and asks them tomorrow, bro, how do you know he has not taken? Sir, see sir declaration. That is more than sufficient. Okay. So if you see, yeah, see whether payment through overseas credit card would be counted. Yes, it was counted for sure. It is still now counted. But for your examination purposes, you should write it as a no. No TCS shall be applicable on expenditure of international credit card while being overseas till further order. It was changed in October, again it came in November, December. For exam purposes, they are telling no, so please maintain that only for the examination purpose. For exam purposes. That is why this sheet is important. You should follow what is there in the law now, or you should follow ICAI. So important. With a threshold of 7 lakh for TCS to become applicable on LRS, apply separately. I already asked this question. If 7 lakh is made under education and 7 lakh is made for medical treatment, 7 lakh is for other purposes, 7 lakh should each, no, combined threshold. 7 lakh shall not be liable to TDS. So subsequent 14 lakh shall be liable to TCS. And it depends on the time of remittance also, as the rates are changing from 1st October. So let us say 7 lakh was during financial year 23-24 for education or any other purpose, no TCS. Because whether it is before 110, after 110, same. Beyond 7 lakh under LRS during the financial year 23-24 on or above 30th September, if it is there, 5%. But if it is beyond 23-24, if it is education loan, 0.5%. Education or medical treatment, 5%. Any other reason, 20%. Since there are different TCS rates on LRS for the first 6 months and next 6 months of financial year, threshold 7 lakh become applicable separately. No, it is once and for all in the entire financial year. You should see when they are making the payments, etc. Is it separately through e-remittance or through different authorized dealers? No. How will the authorized dealer know about it? I already told you. Facility to provide real-time update is not yet still under development by the RBI. You should take a undertaking letter. If you've taken an undertaking, Western Union Money Transfer, ICICI Bank, etc. will not be treated as SSC in default. They can go ahead. But false information, if they have given, etc., then you can take action against the person who has given false information. There is a threshold of 7 lakh for remittance under LRS for TCS to become applicable, whereas another threshold of 7 lakh for overseas tour program package. Are they independent? Yes. These through threshold apply independently. For LRS, 7 lakh applies to make TCS applicable, first of all. because up to 7 lakhs there is no TCS. For purchase of overseas program package, 7 lakh applies to determine the TCS rate, whether it is 5% or 20%. Right? So if you see, for education or other things, no TCS, that is LRS. But overseas tour program package, up to 7 lakh, it is 5%. Beyond 7 lakh, 20%. So both should go hand in hand. Overall limit also you should count, no? Either way. Yes. Resident individual spend 3 lakh for purchase of overseas tour program package from a foreign tour and remits money which is classified under LRS. There is no other remittance under LRS, whether TCS is applicable. Since for the purchase of overseas tour program package, threshold of 7 lakh for applicability does not apply. TCS will be applicable and tax is required to be collected. As I told you, there is no exemption there. 5% you should collect. There are different rates for remittance for medical treatment education. What do you mean by medical treatment? What do you mean by education? Medical treatment will be purchase of tickets to and fro for him and the attendant. Full medical expense, day-to-day expenses, everything will be counted in medical treatment. Similarly, education will include to and fro tickets, overseas education, tuition fee, and day-to-day expenses. Everything. Whether purchase of international travel ticket or hotel accommodation on standalone basis, purchase of overseas tour program package, yes. Overseas tour program package will not just include hotel standalone or standalone international travel, but at least two of the following: either international travel ticket and hotel accommodation, or any other expenditure. There you will book for some, some show there. You will book a train ticket, or you will book some fantasy park entry tickets. You will pay through the agent. All that will be counted. This TCS is very, very important. Go through properly, my dear friends. Then PAN is very easy. Let's finish off quickly. PAN is mandatory in all documents pertaining to transactions entered into by him. However, that PAN is relaxed in certain cases where you just have to make a declaration under form number 60. So basically here it says any person not being a company or a firm, basically individual who does not have a PAN, who enters into any transaction, has to make a declaration in form number 60. What declaration? This one. All such transactions with respect to opening of an account in a banking company or cooperative bank, you have to declare under form number 60. Apart from that, if you make a time deposit in a banking company, post office, or a Nidhi company, the amount is exceeding 50,000 or aggregating to more than 5 lakh during the financial year. If you are making a time deposit, each time deposit more than 50,000 or overall it is 5 lakh, then you have to make a what? Form number 60, which to give a declaration. Apart from that, if you have not been allotted a PAN, you have to apply for a PAN if you intend to enter into any of these followings. If you want to deposit cash in one or more accounts of the banking company, etc. If the aggregate amount of cash deposit is 20 lakh or more, then you have to apply for a PAN. If you are withdrawing any money, the withdrawal happens 20 lakh or more, you have to quote your PAN card number. Or if you're opening a current account, your business account or a cash credit account, definitely you have to obtain PAN, is what they say. But if you are a non-resident or a foreign company, non-resident individual or a foreign company, then PAN is not required. Then you can give a simple declaration. Or if the transaction is between IFSC banking unit. This is a banking company inside an IFSC, International Financial Service Center, then not needed. Or if it's with a person who doesn't have any other income in India, but only this particular income, then it is not needed. This you can go through theory, guys. Apart from that, all other things you have covered in depth. This is a statutory update, my dear friends. Hope it is clear. Go through this at varying speeds, whatever you want. Study this and go. Guarantee few questions will come in the exam. Okay, on that note, all of you, come on. Fist bump. Yes, I can't see you. All of you have to do it. Good. So take care. Love you all. Put in the comments if you have anything to ask me. You can comment here below. Okay, I'll try to answer as much as possible. Take care, guys. Bye. All the best.